I mean, we're getting older. The baby boomers have hit their prime. If you look outside in York Region, I was just talking to my wife about this, there's a long-term care facility going up on every corner. I can count 4 in Thornhill at least that I've seen just go up recently, and they're massive, they're huge. And so long-term care insurance, it's not popular yet. I think it will be. I think it's going to become actually very scary popular because the statistics point to it becoming more popular. Mortality rate has gone up. We're living a lot longer. We're living about 8 to 9 years longer, I believe it is, but we're not living better.
Okay.
So we're living those extra 8, 9 years, but we're living them in a long-term care facility where we need help, and thus the need, thus defining the need for long-term care insurance.
Right.
So long-term care insurance, basically what it means is it's going to go if you can't perform 2 out of your 6 daily living activities. And those activities point out to bathing, continence, dressing, eating, toileting, and transferring. In case you don't know what continence means, it means bowel. So if you can't hold in your bowel. So if 2 out of those cannot be met, and again, you have the choice with long-term care of either being in a home care facility, home care or long-term care facility. And so basically, you can once that plays into effect, it's a lump sum payout that will occur.
So same thing, you're paying up until the point where you need to go into a long-term care or you need home care?
Actually, it depends on which carrier again, but for example, RBC, if you start young enough, you either pay till age 65 or you pay for 20 years, whichever is longer, and then you're paid up.
Okay.
And what it does is it'll pay you, I mean, again, you decide what it's going to pay you, but it can be a daily benefit of $100 a month, or $100 a day, or $200 a day, or $5,000 a month. And I did some, research, just giving you the stats here, but the average cost of a long-term care facility, which is, government subsidized, can still cost you about $2,100 a month.
Right.
That's what my dad was paying. My grandmother passed away last year, unfortunately, and he had been paying that for about 4 or 5 years. She was in a long-term care facility, and I didn't even know he was paying that much, but it's pretty crazy. And the costs are rising. The costs are rising. As you see, there's more long-term care facilities going up because the government can't subsidize everything, obviously, and people want better care than what they're getting. They want, they need more care.
They need more care, for sure.
Exactly. Statistics Canada released an interesting statistic that in 2021, the population will be comprised of seniors of 19%. So 19% of the population will be seniors.
Right.
Imagine the strain that it's going to put on our system.
Right, on our entire economy, really. This is a concern,
of course,
across the board, not just through insurance, but everywhere.
So what you have to do is you have to think, what am I going to do now to protect myself from that?
And a lot of people in our generation have parents who are in that situation. So this insurance isn't just for them. It's for your family too, right?
It's for us. A lot of us, obviously, we want the best for our parents. And when I visited my grandmother, it was a government-run facility. I would want, obviously, I would want more, but I don't know if I could afford it. At that stage, I'll have kids in university probably at that point. How am I going to shoulder that expense? How am I going to afford that?
Exactly.
The older people always think, oh, well, I have my house and I've got my RSPs. You'll deplete everything, obviously. And if you have, a couple, for example, husband and wife, and the husband, let's say, gets Alzheimer's, and he's put into a long-term care facility, the wife is going to do anything she can to make sure her husband is going to have the best life possible, even if that means, and on average, the stat is $5,000 a month that people will pay for a private care facility. $5,000 a month. Imagine if you're in there for 4 or 5 years, that's $300,000. That wife has just basically sold her house.
Right.
She's refinanced everything. She maybe lost her RSPs. Who's going to take care of her now? And
home care is an option, as we discussed, but not necessarily cheaper.
Exactly. Well, much more expensive for home care. Yeah, definitely. It's an option that you can add on to your long-term care facility package. A lot of people like the idea of home care, but when they see the price, they kind of they kind of sway away from it. It's very expensive for the home care But some people will, you know, they want that. They want to stay in their home.
Okay. So I asked you in the break, so when you're taking out insurance policies, are you, you know, you're doing your life insurance, you're doing your critical care, critical illness, and you're doing your long-term care, or as many as you can, really?
Again, it's got to be budget permitting.
Right.
You've got to look at what's important now. I mean, I was just having a conversation with a coworker today, and she told me, you know, I've got my life, I've got my DI, I'm just using abbreviations here, I've got my CI, but I don't have my long-term care because I can't afford it. You know, what do? I know I need it, but I can't afford it. And, you know, you just have to do what you can do.
Right.
All of them are important. I would say, you know, one is no more important than the other. You just have to kind of make sure that you're aligned, you know, with your budget, and hopefully long-term care is not that expensive if you take it out when you're younger. Although some of the things you should know about it are that the premiums can increase every 5 years. Most of the companies have a guarantee for at least 5 years, and then the prices might increase within a group. RBC, with their long-term care, they actually guarantee you that the increase will never go above a certain amount, which is nice. And RBC also has one that's paid up in full at 20 years. So that, I mean, that's worthwhile. You know, depending on what carrier you go with, you'll get different benefits. Manulife has a combination of one with husband and wife, so that if either one gets requires long-term care, they can use that as well.
Okay. Jack, I want to thank you for being a fantastic guest. How can people reach you if they want to get some more information?
Yeah, if they want to get information from me, they can always call me, or they can visit my website at www.lifeman.ca. And if you're interested in knowing about the truth about mortgage insurance, it's a whole website set up. You basically enter your name and email, and you'll get all the information you need. Thetruthaboutmortgageinsurance.com, and you'll get web videos, and it'll explain everything. Even go through all the applications.
Excellent. Thanks so much for being an awesome guest.
Pleasure.
Thanks to everyone at home for calling in and watching. We'll see you here next week on In the Know. Welcome back to In the Know. We're talking about life insurance today, and Jack the Lifeman Bendahan is our guest expert. So we're talking about long-term care insurance, and as everyone knows, the population is getting older.
Yeah,